from receiver are merged in sender as well, and you lose traceability, you lose visibility of what is our cost and what is the receiver cost. So to have that breakdown of the receiver, sender and all that, we have to refer separate reports, which is a partner breakdown. So there are reports which provide breakdown based on partner cost center. We have to report those reports, then we will get that breakdown separately. So let us see an example. Now here is the distribution example. So here is the sender cost center. Chilled water is a cost center which is allocating cost from its cost to other cost center. Now here you will see that there are debits which are there on the cost center, water, gas, salaries and all that. Okay, these are the debits. Now all the credits are with the same cost element. So same cost elements are used, and you will find that they are credited here. 1 lakh, 120,000, 240,000, 200,000, and they are credited in the same cost element. Now let us see the receiver cost center. Now when you see the receiver cost center, you will find exactly that these costs are now coming in the receiver cost center with the same cost element: water, gas, salaries. Okay, so one of the benefits is you get to know what are the actual breakdown of the cost in the receiver cost center, but then you lose visibility as to what is our cost and what is the receiver cost in the standard, traditional standard cost center reports. So this is what is happening. You are getting the total cost, which is including our cost as well. Now to see a breakdown, what we have to do is we have to refer a report called as this one, and we then get a breakdown. So what is coming in from chilled water is this much. So cost center, this one, this is the breakdown. For again gas, again this is coming from chilled water, and salary, this is coming from chilled water. So we are getting a breakdown based on receiver cost center, which uses a secondary cost element, which is assessment cost element type 42. It allocates both secondary and primary costs which are debited on the cost center. The advantage of the assessment is the receiver cost center gets visibility of its own cost in the cost center reports, and additionally have direct visibility of the allocated cost coming in from the sender cost, because of the fact that there is only one cost element getting debited on the receiver cost center through a secondary cost element. Advantage of using an assessment is allocate both primary and secondary cost. Disadvantage of assessment is the receiver cost center does not get the breakdown of the cost allocated to it by the sender cost center. So you do not get a breakdown of what are the costs allocated by the sender. Now let us see an example of assessment. So let us see an example here. This is the sender cost center, production planning, which is sending cost. Now here are the costs which are debited on the sender cost center, 820,000, and you see here that there is only one line item which is getting credited using the secondary cost element. 630,440 is the assessment cost element, production planning allocation, and it is crediting the sender cost center 820,000. Let us see the receiver cost center. Now receiver cost center, there are multiple cost center which are getting in the production planning. For example, machine, grinding, production, mixing, labor cost center. And we see here that it is getting debited by a separate cost element called as assessment cost element, 630,440 production planning allocation coming into machine grinding cost center. So you are getting a visibility of your own cost, that is water, gas, salaries, plus you are getting a visibility of what is coming in from the receiver cost. We understand, let us see the direct activity allocation. Now, direct activity allocation involves the measuring, recording and allocating of business services performed. Activity types are used as cost drivers. So when does activity allocation occur? Is basically when business transactions are confirmed or when posting activity quantities to accounts. Example, plant maintenance hours, production hours, labor hours. So whenever the production people confirm that the production hours has been done, they will confirm the number of production hours, the number of labor hours on each of the production hours. So they will confirm the activity, that this activity of 7 hours, 10 hours or 15 hours has been completed on the production order. So what happens is the system multiplies the activity produced by the price of the activity type. So activity type are planned using prices set manually or using SA-based price calculation. Cost element type 43 is used for allocation. Now, indirect activity allocation. Where it is not possible to use direct activity allocation, then this method is used. And when it is difficult to allocate activities on each production order or cost center, then we use other allocation parameters, which could be the production hours activity type. In this allocation, we can use any of the following basis: activity quantities or statistical key figures. So activity outputs are planned on the center cost center. Allocation is run on the production order using the production hour activity output on each cost on each production and allocated on the production order. So cost element type 43 is used for allocation. Let us understand splitting. Now splitting makes it possible to divide cost on cost center into fixed and variable portion of the activity type. So in splitting structure, we have to define the cost element which are fixed in nature and assign the splitting structure to the cost center. Activity dependent primary cost planning is done for variable cost. On execution of splitting, the cost element defined in splitting structure are treated as fixed, and activity dependent primary cost planning are treated as variable. In actual, the same parameters as of planning is used for calculating fixed and variable cost. Let's assume that there are two activities on a single cost center, then we still can use splitting to split the cost between the two activity types. So we can assign one set of cost elements to one activity type, another set of cost elements to another activity type to define split between the two activity types on the cost center. Now, cost center allocation planning. Now, these are the various cost centers typically in a company, wherein we have machine and labor, from where the product actually keeps on moving. So product which is getting manufactured keeps on moving. The machine and labor are the activities which are getting updated on the product. Now, utilities are service cost center, maintenance is a service cost center, engineering and projects, production planning is a service cost center. So all of these costs from these service cost centers will either fully or partially be allocated onto these machine and labor cost, so that the cost is getting that. So all those costs which are indirectly or directly related for the manufacturing of product are updated in the machine and these production cost centers, wherein we'll have to define an allocation. Now, there are other cost centers which are not at all directly related to any production, so research and development, marketing costs. These costs will not go into the product, they will be allocated separately, or rather directly to the P&L, showing separate function as research and development and marketing cost. The allocation flow typically looks like this. Utilities, which is chilled water, cooling tower, are allocating cost to machine, and let's assume that they are allocating it through distribution cycle. Then production planning, which is rendering support functions to machine, is allocating cost to machine and also to labor cost center. Engineering and projects are also supporting the machine, so it will allocate cost to machine. And engineering projects also will allocate cost to labor. And this is done through an assessment cycle. Maintenance are rendering cost or giving services to utilities, and here it is difficult for maintenance to allocate cost to various utilities cost centers, so they are using indirect activity allocation. Now again, what will happen is utilities we have already allocated to machine through distribution. We'll run another assessment cycle to allocate costs from utilities again to machine. So this is basically typically the flow of cost center allocation planning, which also forms the basis of activity price calculation and also for finally the product cost planning. So what are the costs which are going into the product from the cost center? So let us start with primary cost planning, which is activity independent. So in SAP's main screen, in the T code, what we update in the transaction bar is NWBC. Once we update NWBC, we are shown the Internet Explorer. Internet Explorer screen opens up, and in the Internet Explorer opens up, it is called as NetWeaver Business Client. We click on account planning, accounting planning. So we click on accounting planning and we get this particular screen for cost center planning. So we click on cost center planning and we get the screen for cost element planning. So we click on cost element planning basic. So once we click on cost element planning basic, we get this screen wherein we will update the version, which is 0. Then fiscal year for which we are planning 2017, and the posting period is from 1 to 12. And we update the cost center hierarchy. It is prefixed by company code and our cost center hierarchy, and the cost element hierarchy. So if we have a cost element hierarchy, we will update it here, prefixed by the company. So this is what we do. We click on execute and we see that there is nothing here, but the screen below opens for updating cost center, cost element, currency and amount. So what we try to do is we take a drop down in the field cost center and we get this listing of what are the cost centers available. So we will select cost center called as chilled water by clicking on this, by selecting this line and clicking OK. Click OK. So this gets selected, chilled water gets selected. Then similarly you could also take a drop down in cost element and you update the amount for which we are doing the planning. So chilled water, we are updating 120,000. Similarly, we are updating other cost elements. For chilled, we had updated for water. Now we are updating for gas. Gas will be 240,000, salaries at 200,000. Now this is what the total plan cost for the utilities cost center, or rather the chilled water cost center for the year. So we should likewise update other cost element planning done on utilities cost center. Thus we have done planning on utilities cost center. Let us go to statistical key figure planning. What is statistical key figure planning? Is updating the SKFs, the cost allocation drivers on each of the receiver cost centers. Now, chilled water will be allocated to the receivers based on certain parameters, and that is the statistical key figure. So, this chilled water consumption. So, what we are doing is on machine and these two from production cost centers, we are updating version from and to period and fiscal year, and updating the cost center, the receiver cost center basically, and the statistical key figure. That is chilled water. And what we'll do is we'll update for machine grinding, we'll update as 800 or 80,000. 80,000 of output will be received by machine grinding, and production mixing will receive 90,000 chilling water. So we are updating on the production mixing 90,000, and then we click on save. So we have now updated the statistical key figure on the receiver cost center. Then what we do is we run the distribution cycle using transaction code called as KSVB. So what we do in planning is we update the period 1 to 12, 2017, and ideally we should be running in test run so that we can get the errors, we can remove the errors, warning messages and all that. So it is always advisable to run in test run, clear all those errors, and then run, uncheck the test run and run it in production. Now we are running in production run. So here cost center cycle is there, chilling water allocation. We click on execute, and this is what we get. So it has posted a document number, and we see that there are 3 senders and 6 receivers. So clicking on the sender list, we are getting this. These are the senders, and these are the cost elements used, and these are the amounts. And we are getting for period 1, period 2, period 3, period 4, period 5, period 6, and 7, and so on. We click on the receiver list and see that these are the receivers which are getting 1 and 2, 1 and 2. So these are getting it's using the same cost element, the primary cost element. Let us see the distribution results. Check the report. This is the standard report which we are going to use, 87013611. Cost center actual plan variance. So what we do is we update the fiscal year, period 1 to 12 and the plan version. And here what we do is we update the cost center basically. So what we see is the cost has become 0 on the center cost center. So there was what we had done initially. We had done a planning on the chilled water cost center with water, gas, and salaries. All these costs we had planned, and now all these costs with the same cost element has been transferred and credited to the cost center chilled water. So it has been 120,000 credit, 240,000 credit, 200,000 credit, 560,000. Totally has been credited, and we see nothing remaining on the center cost center. Now we see the receiver report. Now receiver report, we see that the cost is now transferred to the machine cost center. So it is debited 120 water, gas, salaries. This is basically a primary distribution wherein you are using the primary cost element for allocation. Now this was done based on the statistical key figure. Now statistical key figure was updated on the receiver cost center, and the cycle used the receiver parameters to update the cost on to machine grinding and production mixing. So based on the allocation parameters, we had updated chill water on machine grinding and production mixing. So system will consider the ratio of the figures we have updated on each cost center, that is a statistical key figure, and allocate it based on those ratio. Now to get a breakdown by partner, to see what is coming in from receiver, we use this report 87013-615. To see what is coming in from the receiver, we see that the water is coming in from the chilled water cost center. Gas is coming in from the chilled water